So tell me more about treasury companies, because this kind of does feel like it's the big narrative or the big meta of this cycle. Each Bitcoin bull run, we see a new narrative. In 2017, it was the ICO bubbles. In 2021, it was NFTs. This 2025 cycle kind of feels a little bit different because maybe the new narrative is actually around Bitcoin and more in particular, treasury companies. So I'd love your thoughts on what's going on, Alex.
Yeah, so I guess you could kind of categorize Bitcoin Treasury Company as the new shitcoins. Now, they're not all going to be shitcoins. And I understand, initially I was very bearish and I spent the last week and a bit just sort of going down the Bitcoin Treasury rabbit hole and everything. And I think it was Jesse Myers, Bitcoin Croesus or whatever, who said something interesting. He's like, look, a company is just a mechanism or a vehicle for a number of individuals to get together and do things that they can't do on their own, right? So you can take some amount of leverage out as an individual, right? But you can't really sell shares of yourself as an individual. It's like, oh, you can buy stock in Svetsky. Doesn't work like that, right? But what you can do is Svetsky can get together with a group of people and put together a company, which is a collection of individuals, and we can sell shares in the company, and we can therefore gather up resources in a way that you can't do as an individual. And that premise is effectively what is going on here in these Bitcoin treasury companies. People have realized that, hey, the name of the game here is to acquire as much Bitcoin as you can possibly get your hands on. So what's the most effective mechanism to do that? Sure, you can go and stack sats by yourself and you can do that. You can pull out loans and you can stack more sats, you can take up leverage, you can do all this sort of stuff. But there's a limit to how much you can do as an individual. And Saylor really cracked the code here with turning MicroStrategy into effectively a Bitcoin strategy company or a Bitcoin treasury company, versus being a software, a SaaS company. They were a zombie company then, and now they are worth 15 billion? I don't even know what the number is. And it's all been a function of deploying this Bitcoin treasury strategy. So what do I think about it? I think it's very interesting. I think it's novel. I think it's using the existing system in a way that benefits you if your goal is to acquire Bitcoin. But I also think, and this is why I still stand by the whole, this cycle's shitcoins of Bitcoin treasury companies, is it is also going to pull in all of the monkeys that think they can just get rich quick, and basically just think that money is free or that success is free or that things go up in a straight line forever, right? People never thought when the ICOs were around, people like ICOs never, this is it. We figured out we cracked the code for raising money, and this is how everyone's going to raise money in the future. And then, of course, it all blew up. The same thing is going to happen. The same thing happened with NFTs. The same thing happened with, the last run where people thought, Bitcoin hit 69K or whatever, FTX, and then it all blew up and everything came crashing down, right? Like the market can change, the dynamics can change, but human psychology doesn't change. So the same thing is going to happen here. You're going to have people launching treasury companies. Their MNAV is not going to be able to sustain a high enough rate. It's going to close in. They're not going to have any other operating capital or cash flow or anything to cover their the operational expenses or whatever. If they've gotten some debt or if something's happened there, their MNAV is going to compress further. They're going to be in a situation where each share they sell doesn't buy them the same amount of Bitcoin, so they lose the leverage component. Then, the stock price is going to crash. They're going to have to be in a position where they have to sell their Bitcoin, and then, it'll create this sort of unwind. So at some point, we're going to get like this massive, massive run up. Extra risk is going to be taken, whether through debt or through preferred equity issuance, whatever the case is, it doesn't matter. Someone's going to get overextended, and it's going to create a situation where you'll have a deleverage. Leverage works both ways. I think sometimes people forget this, where they say, oh yeah, now the smart money is in. There's no such thing as smart money. Everyone's fucking stupid when it comes to money. So like people are going to get greedy. They're going to overextend. It's going to unravel. And then even the good companies who are doing things right, even they are going to get affected on the way down, because when people when fear comes in and panic comes in, people run for the fucking hills. Doesn't matter what the fundamentals say. I think you and I spoke about this when we were walking through Albufeira, right? People make decisions not because they thought about it themselves, but what the other guy. So it's like if Ray Dalio sells his Bitcoin, every other fucking fund manager is going to sell his Bitcoin, and every other fund manager sells his Bitcoin. Every other person who thought they were smart is going to sell their Bitcoin. Sure, there is a flaw somewhere, right? And that floor gets higher every single cycle because more people understand what Bitcoin is, will not sell it on any circumstance. But even people like you and I, at some point, like I can almost guarantee you, if Bitcoin hits like 500K this cycle, I'll be looking to sell some to fund some lifestyle stuff, right? And I can for damn sure tell you that if it goes from 500 to 400, I'll probably panic because I'll be in my mind thinking, fuck, I could have got 500 for this as opposed to 400. So then I'll probably dump a coin, even though I'm a hodler of last resort, because at some point I want to take some profit, or I want to transform the money into what it's supposed to give me. Because the end goal here isn't money, it's what money can give you, right? So all of these dynamics come into play. And this is why I don't think, this is supposed to be the cycle that ends all cycles. Bullshit. Like, we're going to have a crash. Treasury companies are going to blow up. But it'll make way for the future, what the next era of treasury companies. So I'll shut up there for a second, but that's my take on it.
A lot of interesting thoughts. One, I think you made an interesting point. I think a lot of Bitcoiners will be selling Bitcoin if it hits 500K a coin. I will as well. I'll probably be borrowing against my Bitcoin, but the principles is the same. Bitcoin hits 500K a coin. People who've been hodling this thing for 10 years, they're probably going to diversify 2 or 3% of their net worth into something else. Doesn't mean they've lost faith in Bitcoin. It's purely because, hey, if you've been in Bitcoin for 10 years, I mean, if your stacks up 10,000%, it doesn't hurt to trim 1 or 2%. I think that's a great take. I think that's interesting. I've never really dived into the numbers of what those dynamics might look like when an unwind happens with those treasury companies. So I have nothing intelligent to say on that topic. But what I do think is interesting is you talked about, hey, nothing's going up in a straight line. I think that's really interesting. I heard someone the other day, I believe it might have been British Hodl on a different podcast, say that the treasury companies might create like a 2, 3, or 4 year mania that actually looks a lot like the dot-com bubble. So I haven't made a video about this. This will be completely fresh for some people. His reasoning and his take, I'll try to do my best to sum it up for him. But it was, hey, there was a massive mania around the thing called the internet. And this kind of happened in the public markets in 98, 99, 2000, and 2001. His kind of big case is like, we haven't really seen a Bitcoin bubble yet because the public markets, or the big boys, the billionaires, the pension funds, the nation states, none of these guys have really been in Bitcoin. But now that we're seeing all of these guys and the Larry Finks, the asset managers, and the hedge funds like Dalio, etc., get into Bitcoin, maybe we see a 2, 3, 4 year kind of super bubble in Bitcoin that is kind of around these Bitcoin treasury companies. Is that kind of what you were talking about, Alex, or maybe something slightly different? Or what's your thoughts on this whole .com 2.0?
No, that's horseshit. No, so like,
so if you've enjoyed that short clip of my discussion with Alex, you guys are in luck because very, very soon, in a matter of minutes, maybe hours, I'm going to be releasing the full interview with Alex Svetsky on this channel. Make sure you are not like the 71% of people who watch these videos and are not subscribed. They will not be notified when I drop that full interview. So again, make sure you subscribed. And with all that said, I hope you enjoyed the full interview that will be dropping soon.